Hello, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Tuesday, the 28th of August, 2018. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is yet again risk on. The risk sentiment is to allocating to equities, to risk. The bonds are off 14 ticks more than they were yesterday. At this time, the U.S. dollar is off 24.5 ticks or 24.5 cents. The Bund's down 24 ticks, and the 10-year is down 4 ticks. The Japanese yen is unchanged. The leader this morning is the euro. The euro is up 385 pips this morning. The pound is up 35, and the Nasdaq's up 19.75 points, almost 20 points, or 0.26%. The Nasdaq's a leader in the indices this morning. Oil is trading 68.96, up 8 cents in the October contract. So clearly, risk is on in the overnight session, and it was kind of obvious, actually. Talked about this. I commented about this in the Convergent chat room. It was kind of obvious that the night session is likely, the extended trading hours or the overnight session, whatever you want to call it, Globex session, is likely to extend higher and through 2,900. Given the way it closed, we just did not give up any territory on the close yesterday, closing near highs at 28.9875 in the ES. With a new all-time high, just 2 ticks above. So here's the S&P trading 2904.50 currently, right at the overnight high and pushing. So we're looking at what will likely be pretty one-sided market, pretty dull trade. When the market goes into rally mode, it's buy and hold time for participants. And generally, volatility falls off, the VIX falls off, the range falls off, and it's a relatively boring day trade. It's a regime that is not ideal for day traders. So just be aware of that coming in terms of wanting to really push your trades. And again, I'm going to remind you that the upcoming weekend is a holiday weekend in the U.S. It's Labor Day, in fact, the U.S. and Canada, I believe. It's Labor Day next Monday, so Friday is going to be a pretty short trade. The market continues to stay open, but it's likely to be pretty quiet. As far as what we're looking for today in terms of market disruptions in news events, we already got the advanced goods trade balance. The S&P Case-Shiller just came out. We have consumer confidence in front of us for August, expecting 126.5. Last, the prior is 127.4. And Richmond Fed, which is a low-tier figure. Other than that, fairly quiet on the announcement front. Let's take a look at what we expected yesterday. One second. All right, so what do we have yesterday? Yesterday, given the way we opened, or where we were before the open, I should say, we had several scenarios that could have played out. The main of which was for the market to pull back a little bit towards 28.85. And then to ultimately push to 28.97 and a quarter, at least into that stock zone, 28.97 and a quarter, 28.98. That's the main scenario. That's the most likely scenario. And then we had these others, and that's why it looks kind of messy. But the key scenario was anticipating leaving the gap open. This box that I drew under the green for scenario 1, that's exactly what happened. Here's what things looked like. So you saw what was expected. Here's what it looked like. There it is. We pulled back to 87 on the low instead of coming down into the 85. The 85 was expected as the area that the market would likely pull back to before it pushes to 28.97, which is right there. The initial test was on the dot on top of 28.97. Pull back to mid. This was a clear setup for me. Pull back on impulse and initiative buying. Pull back to mid, and then it took a while, but it ended up working out, pushing 28.99, and then ultimately 28.99 and a quarter, because again we formed another impulsive move here, and so we got the continuation move by one tick above there. And then the market went completely dead from 11 Central, 12 Eastern onwards. Just a big zipper that moved the point of control up. The point of control was on the upper end of the range, P-shaped profile. So if you look, here's a P shape like that. This is short covering, short squeeze, and normal variation day. So we extended the range and we continued to stay above the IB. It makes it a normal variation day, and then we left this gap zone open, and that's marked in your FT71 master levels right there. So looking above us, we have very little to go off of, right? We're in new high territory. And so there's no prior auction to refer to. So we're relegated, just like for yesterday. We had to use measured moves for our targets. The century figure at 2,900. And then the next measured move up is right there, 29.08 and a quarter, and so on and so forth. As the market trades, more measured moves will be projected. And that's how I trade once we're out of trading prior auction territory. So that's how things are shaping up. Keep an eye out for the gap below. We're likely to extend today, as we already are, and that's like the gap is likely to be tested. The prior high at 28.84 even is likely to be tested. Remember, it's 28.84, back adjusted, roll adjusted. As far as what we are expecting, or as far as what we got overnight, the overnight session, complete balance. Again, pretty good volume. Tested up, tested down, and is testing up and breaking out currently. In fact, let me change this color here because it's not very good. Let's gray that a little more. Yeah. So what we ended up with is a completely Gaussian balanced profile overnight with the point of control at yesterday's close. There's the point of control overnight. But overall, the pattern for the overnight session is that of a completely balanced market that's breaking out to the high side. It traded above the close, small below the close, and now above. So overnight inventory is likely to be long. So that's where we were yesterday. Where are we today? Let's clean up this chart. It's a little messy. Cleaning up this chart. What do we expect today? Here we are, pushing the overnight high again. Very little to work with in this area. So I have to revert back, as I said, to measured moves and to basically scalping into position. So campaigning, scalping, those skill sets are important today. We're opening in a gap. I'm looking for an open auction out of range. I'm looking for it to push higher, and then I'm looking for responsive selling. So the expectation today is we're likely to sell responsively to 2,900 and potentially push through to 28.9750. That's the main expectation today. Okay, so this is the bias for me today. The most likely play of the day today is a push higher that ends up getting sold back into the point of control or beyond. It could push even down to 95, 94, 50 down here. So pay attention to any heaviness to the market, to a delta that expands strongly to the downside on a lower rotation versus expanding aggressively to the upside on an up rotation. That's really what I'm looking for, just order flow scalping. The second scenario, and I believe that was this color, the secondary scenario is likely to be an open auction that just drifts down into the prior day's range. It's not an opposite scenario. It is a scenario where the market just grinds its way down and then starts pushing directly into the range, into the prior day's range, so that we end up with an overlap, which gives us a micro composite tomorrow to work off of. And then again, we have auction levels to trade from. That's the secondary scenario. The tertiary scenario is a open test drive. So we have an open test lower, the gap zone, and then we drive, and then we start to move through to higher levels. Next level up is 29.20, which is quite a distance away. So those are the three key scenarios. Again, two of them responsive, looking lower, and the first one bouncing off of the prior day's point of control area or value area, with scenario 2 continuing lower and being aggressive lower. Now we've had several days of up movement. Those with every day that we have an up close, the probability of the next day having an up close diminishes historically. But again, we can't just look at that in a vacuum. So those are the three main ideas. That's all I have for you. Convergent members, today at noon Central, 1 Eastern, we're doing a follow-up on the trader intervention that we did on July 10th to see how this particular trader has changed or improved in his live account since that last intervention. The invitation has already been sent out to you. Good luck today. Take care.